What exactly happens when you default or stop paying on a loan? Not to be all doom and gloom, loans do go bad. Whether it's for a car that you purchased, a store card, or potentially an EIDL loan that you took out to save your business. Any loan that goes bad is going to have ramifications for the borrower. I'm also not going to take either position when it comes to borrowing money. Some people will tell you to never borrow money to start a business or run a business or whatever, and others will say to only borrow money or always borrow money. I don't think there's any clear and correct path that everyone should take. I'm going to stay here in the middle and say to do whatever you believe is the best for your business. At the end of the day, with all the would-be gurus and the knowledge that they possess, is not responsible for your success or failure. You are. Take all the information at face value and make sure you do your own due diligence and research when it comes to these topics. With all that said, in this video, I want to go over what are the steps involved when a loan goes bad. This is going to be from both perspectives of the bank and the borrower. In all of my time in the banking industry, I have seen businesses succeed and fail. Unfortunately, it's part of my job, and something I have to realize on a daily basis is that loans go bad. Sometimes loans go bad through no fault of the borrower, and just a crummy deal or something in life happened that was unavoidable. The first thing you need to know is that banks are in business to lend money. That's their business model and how they make money. There is no personal feelings involved, it is strictly a transaction. The last thing that any bank wants to do is have a business fail. Once that business fails, there's no way to repay that loan. The best situation that you can possibly be in a bank's perspective, is to pay down the debt, expand your business, borrow more money, keep expanding, and the cycle continues. This is a way for your business and the bank to grow together. You can both mutually benefit from your success. But sometimes that's just not the case. Now, in the case of a typical loan, when you stop paying, or I should say when the bank finally finds out you stop paying, there's going to be several things that happen. First, the bank is typically going to give you a grace period of, let's say, 30 days, and it's going to be determined on your type of institution and things like that, but I'm just going to give you a general timeline. During that period, you're going to accrue interest and any kind of late fees and things like that. After about 60 days, you're going to start receiving letters from the bank politely asking you to make payments and bring your loan up to date. After about 90 days of not paying anything or communicating with the bank, your loan is going to be considered non-accrual. What this means is your loan will stop accruing interest, and any money that you pay down will directly pay down the principal. This is the quickest way that the bank can recapture the money that they lent you. At this point, the interest is kind of a non-issue. They're more concerned with the overall principal amount that you owe them. Now, depending on how big your bank is and how large the loan was, they may just charge off that amount. If it's below a certain threshold, it's really not worth it for the bank to go after you. Once it's charged off, it's going to hit your credit report and stay with you financially until it gets cleared up. If the loan is secured with collateral, such as a vehicle or all business assets like a UCC filing, the bank is going to petition the court to obtain your assets for sale, as in they're going to repossess it. They're going to do that and sell as many assets as they can to get out of the loan. If you sign a document called a confession of judgment, this means that they don't have to go to a court and request a judgment to sue you. They just simply can repossess your assets. That document would have been with your loan agreements and things like that you signed when you got the money. This is going to be the simplest way that the bank can collect on your debt. Anything that is owed above your collateral value, if it's sold, for instance, let's say you owe the bank $10,000 and the car or equipment is worth $8,000. Once everything's settled, they're going to ask you for that $2,000 to settle out your account. If you don't pay that back, then they're going to charge that amount off. Charging a debt off doesn't mean that you're off the hook. It simply means that your debt will be sold to a collection agency for pennies on the dollar. Now you become the problem of the collection agent. This can cause a downward spiral, as collection agents have the moral compass of a tree. They can do things outside of regulations that banks really can't do, and all of this just to collect the money. If you ever do have a collection agent call you and to try and settle an account, make sure you get everything in writing before you send them any money. If you don't get it in writing, anything they say on the phone, like, oh yeah, your debt's now wiped clear with this $500 payment. If it's not in writing, they'll call you the next week and try and get more money. You can report them to the Better Business Bureau, but most collection agencies have a file with the Better Business Bureau. It's probably as tall as I am. Where the process gets a little more tricky is when the SBA gets involved. If you have a loan that is guaranteed by the SBA, once that loan goes past a certain period of time, your lender or bank will have to notify the SBA that you stop paying. At that point, the bank is going to keep records of every time they contact you. every payment you make, every time you dodge their phone calls, even if they make a site visit, things like that. If you're not around or the property looks vacant, they're going to note all of that. After your loan reaches that non-accrual period, the bank is going to reach out and try and liquidate whatever assets you have, or I should say whatever your business has. More than likely, you personally guarantee these SBA loans because almost all SBA loans require personal guarantee. One caveat to that rule is the new EIDL loans, and anything under $250,000 and any of the PPP loans that should be forgiven but aren't are not personally guaranteed. Without a personal guarantee, that means that once the business assets are all dried up and there's nothing left, the SBA will not go after you personally for those funds. Unfortunately, that means that if you default on a government guaranteed loan, similarly to a student loan, you will never be allowed to borrow money from the government again. And it will be extremely difficult to get any new kind of business loan under any name if you were attached. Now, if you did sign a personal guarantee and your loan goes bad, the bank will liquidate all of the assets of your business, and then they're going to kindly ask you to pay the difference. Once the bank completes all of their due diligence with your loan, they're going to submit a package to the SBA saying, hey, we did everything we needed, pay us our money. This is after all of the collateral is liquidated and gone and nothing else remains in your business. The SBA is going to say, okay, you did everything you possibly could. Here's the 75% that we owe you. I say 75% because the SBA loan programs can vary in the amount that they guarantee. I think currently they're guaranteeing 90% of the loan. Once that is done and the money is paid to the bank from the SBA, the bank is out of it. Now the SBA will be that collection agency calling you, asking you for the money. The SBA is able to set off any tax refunds that you may get, and they can also attach any kind of federal money that you're due. Depending on the amount, you may be able to settle with the SBA and get completely forgiven, but I have never talked to anybody that was successful with that. It's all going to depend on who you're talking to and working with the SBA. The bottom line is you never want to default on a loan. But if it happens, the best thing to stave off any detrimental effects is always be upfront and honest with your loan officer. If you're having issues with your business and you can't make your monthly or quarterly payments or whatever you're set up, call your loan officer and immediately tell them your situation. Hopefully they can work with you and get you through that period. The SBA is only in business to help small businesses. If you are truly out there trying to make your business work, they will work with you. They have things that they can do, such as deferring your interest payments or moving your payments out, lowering them, things like that can help your cash flow of your business. Typically, a bank can't do that, and once your loan goes bad, it kind of has to go to a different part of the bank where bad loans go. The reason I want to do this video is that in all the news with all these EIDL money going out there, many YouTubers are out there saying that this program is going to be completely forgiven like the PPP, but I wouldn't bet money on it. So that being said, if you do have a business and you did receive money, or if you didn't receive the money but still have a business, you may want to do a little research and make sure nobody took out money or one of these EIDL loans in your name. You don't want the payment deferral, which is now set at 2 years, to come up all of a sudden and you're delinquent on a loan you didn't know you had. If you did receive the money, make sure you know exactly how to make the payment and where to make the loan payment when it's due. You can check out this video here where I tell you exactly where to go to find your payment and when it's due. If you want to check, you can go to the same website, type in your business information, and try and make an account. If you're successful, you have a loan. If not, congratulations, no fraud was done to your business. On this channel, I believe in giving you both the good and the bad. I believe in order to be successful in business, you have to take into account the good and the bad in any situation. I hope you got a lot of value out of this video, and if you could do me a favor and smash that like button before you leave, I would really appreciate it as it helps out the channel a ton. If you're interested in more content like this, consider subscribing and post a comment below letting me know what you'd be interested in learning more about. I wish you the best in your business, and until next time, have a great day.